So, you're ready to buy your first home. That is a huge, exciting step. But let's be real, it can also feel, well, a little terrifying. In this explainer, we're going to give you a super clear, simple financial plan to make it all happen with confidence, not stress. You've already made the big call. The whole rent versus buy debate is over, and you've chosen your path. So let's skip right past the if and get straight to the how, the actual practical steps to make that dream a reality. And to do that, you need a playbook. Consider this your simple, powerful guide to navigating what is probably the biggest purchase of your life, with total clarity. Okay, let's kick things off with the absolute cornerstone of your entire home buying plan. It's a simple little rule of thumb, it's easy to remember, and it's going to guide all of your most important decisions. It's called the 5-20-40 rule, and honestly, it's brilliant because it answers the three giant questions probably swirling in your head right now. How much house can I actually afford? How long should I be paying this thing off? And what's a monthly payment that won't make me want to cry? So, let's break it down. First up, the 5. This number sets your absolute budget ceiling. The total price tag of your house should be no more than 5 times your annual family income. This is so important to stop you from becoming house poor, where your house basically owns you and there's no money left for anything else. Next up, the 20. This is all about your timeline. Your goal should be to keep that home loan tenure to a maximum of 20 years. Yeah, longer loans might have slightly smaller monthly payments that look tempting, but trust me, they cost you an absolute fortune in extra interest over the long haul. And finally, the 40. Think of this as your monthly reality check. Your EMI, that's your monthly payment, it should not take up more than 40% of your monthly take-home pay. This is the magic number that makes sure you still have money for savings, for emergencies, and, most importantly, for actually having a life. Now here's a point that is a total game changer and makes this rule so powerful. When we say income, we're not just talking about what you make. We mean your total family income, the combined earnings of you, your spouse, anyone else who's contributing. It's teamwork, and in this case, it makes that dream home budget much more realistic. And just look at how this plays out in the real world. It's pretty cool. It doesn't matter if your family income is 12 lakh or double that at 24 lakh. The formula just works. The max house cost stays right at that 5x mark, and look at the EMI. It lands perfectly just under that 40% sweet spot every single time. It's a system that scales perfectly. Okay, so you've got your budget locked in, but what if I told you there's a way to hit the fast forward button on your mortgage? A way to become debt-free years and years ahead of schedule. Let's talk about a powerful strategy to basically cut your loan in half. I know, it sounds a little too good to be true, doesn't it? A 20-year financial commitment just gone in a little over a decade? But this isn't some complex financial wizardry. It's actually a super simple, disciplined approach that can save you a staggering amount of time and money. This chart just lays it out so clearly. The normal payment plan, that's the full 20 years. If you increase your payment by 5% every year, that helps a lot, sure. But look at that last bar. By making just one extra EMI payment per year, bam, you've chopped your 20-year loan down to just 10.5 years. That's incredible. So how does this magic trick work? It is so much simpler than it sounds. In your first year, you just make your normal 12 monthly payments. Easy. But starting in year 2 and for every year after that, you just make 13 payments instead of 12. That's it. This tiny, consistent effort is what shaves almost a full decade off your loan. Now, I can hear you thinking, wait a minute, won't this break that 40% rule we just talked about? That is an excellent question. But here's the key. Your finances aren't frozen in time. Over the next decade, your income is also going to grow, right? Those raises, promotions, they'll easily cover that small increase, keeping your budget perfectly balanced. All right, we've covered the budget, and we have a killer strategy to pay it off fast. So to wrap things up, let's run through a final checklist of absolutely critical things you need to think about before you sign on that dotted line. First things first, how are you going to pay for it? Paying all cash is tempting. I mean, no interest payments is a huge win. But it also means you're tying up all of your capital in one single asset. Taking a loan, on the other hand, actually comes with some great perks, like tax benefits, plus the bank does a free legal check on the property for you, and it helps build your credit score. For most people, a loan is the smarter way to go.
Okay, next is your homework, your due diligence. Do not skip this stuff. Always verify the project on the RARA website to make sure it's legit. Try to get a ready to move in place if you can, just to avoid the pain of paying both rent and an EMI at the same time. And please don't forget to budget for the so-called hidden costs like stamp duty, registration, and of course, home insurance.
You know, with all these numbers and rules, it is so easy to forget why you're doing all this in the first place. It's for that feeling of emotional security, of having a place that is truly 100% yours. It's about building an asset for yourself with every single payment. And it is about the simple freedom of being able to paint a wall whatever crazy color you want without having to ask a landlord for permission. Because after all the spreadsheets and all the planning, it really just comes down to this simple truth: the feeling of stability, of freedom, of ownership. Your own home is finally your own home. And that is a goal worth planning for. Good luck.